But actually, you're right. It's annualizing now that we see reductions in the world car production. No, to answer your question, we don't really see any indications that there should be a much better 2020 than what we expect for 2019. Our expectation is that more a sideways development for the world car production for 2020 and potentially even some years afterwards is the to be expected scenario.
Now, obviously, you can respond to that by reducing costs and perhaps mothballing operations. But is there another way that you can introduce a bit of self-help into a shift into perhaps higher margin, better profitable lines?
Well, obviously, we were talking about markets before. We as Conti have managed in the many years in the past always to outperform the markets with our growth rates. And this is what we expect for this year and for next year as well. We are positioned in those areas in the automotive industries which have above average growth rates, connectivity, electrification of the car, the autonomous or advanced driver assistance system supported car. And all these is portfolio which helps us to grow in the future faster than the markets are growing. Nevertheless, we have to work on costs, we have to work on efficiency, and as well, obviously, like always, we have to look at portfolio adjustments which might be necessary.
So it's Chris here in the studio as well. I was just curious about you talked about cost and mix of products, because from two angles really. Is there any sense of parts of the world are doing better than the others? You mentioned the whole market's deteriorating. And as a second question in terms of managing your cost, wage inflation seems to be picking up pretty much everywhere. Are you feeling that and seeing that? And is there any way you can offset that?
Yes, we are feeling wage increases, specifically in developing countries where there are still wage increase rates of sometimes 10% or more. And this has to be compensated. And overall, this is what I meant with cost reductions, efficiency increases to compensate for that in a world where the growth is less than we had anticipated only 1 year ago.
Wolfgang, I want to just delve a little bit deeper into China, because a lot of the weakness has come from that market and the move towards new vehicles. But is there an element of trade war backlash that's coming through in these numbers, do you feel?
Well, if we look at the weaker Chinese market, it started in July, August last year. It's exactly when those trade discussions among China and the US were starting. This had an effect on the stock market in China. This affected the consumers by buying this, for many of them, most expensive thing they are buying in their lives, the car. And so, yes, we see some effects, some negative effects of all these discussions on the number of cars produced and sold in China. And unfortunately, we don't see that this is coming to an end. And for the total year, we don't expect that the market is coming back into a growth mode.
On that note, then, we have seen a devaluation of the yuan in the last few sessions. Does that pose some threats to your numbers, the falling Chinese currency?
We are in most world regions quite balanced, and overall the companies as well naturally hedged on exchange rates. So from a pure currency translation effect, it should not have too much effect on our numbers. But obviously it might lead to another part of distortions in what is going to be imported, what is produced in China itself, and what is exported. And as far as this is concerning as well the car market and the car supplier market, yes, we will be affected.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.